Welcome to Charter Local Edition. I'm Tracy Young. Our guest is Blake Christian. He's the chairman of the board of the Long Beach Area Chamber of Commerce. And he joins us to highlight a few tax planning tips for businesses during this economic downturn. Good to have you with us, sir.
Great seeing you, Tracy.
Obviously, we're seeing some really definite downturn in the economy and difficult time for businesses. And yet, if this is a time to maybe go back and look through our books and look at our business plans, what are you advising businesses to do during this time frame?
Right. Well, first and foremost, they want to maximize profits, but some companies are in certain industries, and it's impossible for them to turn a profit. So, we kind of take this and phrase it as turning lemons into lemonade. And what we have is situations where when somebody already has a book loss, and so they've probably dealing with their bank and explaining that they're going to turn it around. But we try and take advantage of that from the tax side. And if they're a C Corp where they pay taxes at the corporate level, you can carry that loss back for 2 years just under the normal rules and get refunds for the last 2 years of tax payments. For federal purposes, for California, you can't carry that loss back. Now, because of the 2009 stimulus package, they extended that to 5-year carryback period for companies with less than $15 million of revenue. So most small to medium-sized businesses can actually go back 5 years. Many business owners aren't aware of that. So what we do is we go in there and we try and maximize the loss. You can be aggressive and legitimately and take certain elections to accelerate depreciation, take bad debt deductions, write down inventory. There's just a whole lot of ways to increase that loss and maximize those refunds.
So during difficult times, turn that sort of into an advantage, basically.
Correct.
All right.
Correct.
Will you speak to about right now so many assets, we're actually going through deflation rather than inflation right now. When asset values are low, what can we do with those? How can we take advantage of sort of, again, a negative situation?
Right, well, that's a good point that, again, most people kind of groan that their stock value's gone down or their real estate values have gone down or other assets they own have been devalued. And this is an opportunity to possibly transfer those. Oftentimes people say, oh gosh, I wish I wouldn't have put that piece of real estate. They may own a warehouse and they put it in a C Corp. Very tax inefficient when they go to sell that. So now may be a time to jettison that out to another entity at a much lower tax cost. Also, it's a great time if you're to issue, maybe you want to incentivize your employees but you don't have the cash, issue them stock options. The price of the stock's down, you can issue some shares. That gives them the opportunity to generate capital gain rather than ordinary income for your executive group.
So the bottom line is, like you're saying, a lot of companies may not have a lot of extra cash right now, but you might say, look, I value you as an employee, so please stay on with me, and instead I'll give you a bit of the company. Right,
and maybe if you don't want to give up stock, you can, maybe they are using a company car. You can actually transfer that car to them, the fair market, or that's right, the fair market value of that car can be claimed as a deduction when you transfer it to that person. They pick up income, but the owner gets a tax deduction equal to the value. So there's a lot of ways where you can preserve your cash but still generate a tax deduction.
So it sounds like even during these negative economic times, I guess it's none of those things. It's about really being smart and doing our homework and understanding and managing our business and saying, it's bad, but what's out there for us? And I am hearing from tax consultants, there are a lot of things, but they're nuanced and we need to look hard for them.
Right, and it just takes sitting down with your CPA to make sure that you're taking advantage, and these can be also used for estate planning.
All right, thanks for your time, sir.
Thank you.
For Local Edition, I'm Tracy Young.